Imagine unlocking the doors to your financial dreams with just a number, your credit score. A 750 credit score isn't just a badge of honor. It's your golden ticket to better interest rates, easier loan approvals, and more financial freedom. For example, the difference between a 6% and a 3% mortgage rate over 30 years could mean saving hundreds of thousands of dollars. That's the real power of a strong credit score. In this video, we'll break down exactly how you can go from 0 to 750, step by step, no matter your starting point. Starting your credit journey can feel overwhelming, especially if you're a student, an immigrant, or someone rebuilding after financial mistakes. But here's the truth: building credit isn't magic, it's math. The FICO score system follows a formula, and if you understand the inputs, you can control the outcome. Whether you're starting from scratch or picking up the pieces, you're about to learn the blueprint to climb from 0 to 750. Let's dive into the first steps together. Before we get tactical, let's demystify the FICO score formula. Your score is made up of 5 key factors: payment history 35%, amounts owed 30%, length of credit history 15%, credit mix 10%, and new credit 10%. Each piece plays a role in your overall score. Understanding this breakdown is crucial because it shows you exactly where to focus your efforts. With this knowledge, you're already ahead of most people who treat credit as a mystery. First actionable step is to get a secured credit card. These cards require a deposit, which becomes your credit limit. Think of them as training wheels for your credit journey. Not all secured cards are created equal, so look for ones with low fees and that report to all 3 credit bureaus. Using a secured card responsibly is the fastest way to start building positive credit history, even if you have no prior record. Next, consider becoming an authorized user on someone else's credit card, ideally a parent or partner with excellent credit. This strategy, known as piggybacking, allows their positive payment history to appear on your credit report. It's a legal and effective way to instantly boost your score, especially if your own credit file is thin. Just make sure the primary user pays on time and keeps balances low. Piggybacking as an authorized user is a game changer for those with little or no credit history. When you're added to a well-managed account, you inherit years of positive credit behavior. This can dramatically improve your score in a short period. However, it's important to choose someone who manages their credit responsibly, as their mistakes can also impact your report. One of the most misunderstood aspects of credit is your utilization ratio. This is the percentage of your available credit that you're using at any given time, and it makes up 30% of your FICO score. Keeping your utilization low, ideally below 10%, shows lenders you're responsible and not overextended. Even if you pay your card in full every month, timing matters for how your balance is reported. Let's talk about the Azul method, also known as AZEO. This strategy involves paying your credit card bill before the statement date, not just before the due date. Why? Because the statement date is when your bank reports your balance to the credit bureaus. By paying early, you can show a 0% balance, which can give your score a significant boost. It's a simple trick, but it works wonders. Many people confuse the statement date with the due date. The statement date is when your bank takes a snapshot of your balance and reports it to the credit bureaus. If you pay off your card before this date, your reported utilization will be low or even zero. This small timing adjustment can have a big impact on your credit score over time. Remember, the amounts you owe make up 30% of your FICO score. This means that even if you pay your bills on time, carrying high balances can drag your score down. Focus on keeping your balances low relative to your credit limits. This is one of the fastest ways to see your score climb. The single most important factor in your credit score is your payment history, accounting for 35%. Always pay your bills on time, no exceptions. Even one missed payment can set you back months or even years. Setting up automatic payments is a great way to make sure you never miss a due date. The length of your credit history makes up 15% of your FICO score. The longer your accounts have been open, the better. That's why it's important not to close old accounts, even if you don't use them often. Keeping them open helps build a strong, long-term credit profile. Your credit mix, meaning the variety of credit accounts you have, makes up 10% of your score. Lenders like to see that you can handle different types of credit, such as credit cards, auto loans, and mortgages. Don't rush to open new accounts, but over time, a healthy mix can give your score a boost. The final 10% of your FICO score comes from new credit. Opening several accounts in a short period can actually hurt your score, as it signals risk to lenders. Apply for new credit only when necessary and space out your applications to avoid unnecessary dings to your score. It might seem tempting to close old credit cards you no longer use, but keeping them open is usually better for your score. Old accounts contribute to your length of credit history and available credit, both of which help your score. Unless there's a high annual fee, let those old cards work in your favor. Regularly monitoring your credit is essential. Check your credit report at least once a year for errors or fraudulent activity. Many services offer free credit monitoring, which can alert you to changes and help you catch problems early. Staying informed is key to maintaining a healthy score. Every time you apply for new credit, a hard inquiry is added to your report. Too many hard inquiries in a short time can lower your score. Try to limit applications and only seek new credit when you truly need it. Soft inquiries like checking your own score don't affect your credit. Mistakes happen even on credit reports. If you spot an error, dispute it right away. The credit bureaus are required to investigate and correct inaccuracies. Fixing errors can quickly improve your score and ensure your report reflects your true financial behavior. Building a great credit score is a marathon, not a sprint. Consistency is key. Make payments on time, keep balances low, and monitor your accounts regularly. Over time, these habits will compound and you'll see your score steadily rise toward that 750 goal. Unfortunately, most of us weren't taught about credit in school, but financial education is the foundation for building wealth and security. By understanding how credit works, you're taking control of your financial future. Share this knowledge with friends and family so everyone can benefit. You now have the blueprint to go from 0 to 750 credit score. Remember, it's about smart strategies, patience, and consistency. Use secured cards, leverage authorized user status, master your utilization, and keep learning. Your financial future is in your hands. Let's get your credit score to the moon.